G'day folks, Jim here from Orchard Forex, back with another year of technical analysis, market outlook and possible trading ideas for the various FX pairs, stock indices and commodities that we watch. If you like the videos that we produce, please click the thumbs up icon and subscribe, as it all helps the cause, of course. Since we last updated, we've seen plenty of action. We've seen the final call on Brexit. We've had a large escalation, obviously, in the COVID outbreak, particularly in Europe and the States. We've had yet another presidential impeachment in the US, an outline of the incoming administration's spending plans to reboot the US economy, with the handover of power coming up on Wednesday. So looking ahead, there's going to be plenty of opportunities for trade, I think. In the short term, we've got the Martin Luther King holiday in the States today, so stock markets are going to be closed, while other major features of the coming week will be the central bank meetings at the PBOC, the ECB, the Bank of Japan and also Bank of Canada on Thursday. The PBOC in China takes place on Monday. We've got inflation data coming from Germany, the EU, the UK, Canada and New Zealand this week. Elsewhere, the main events are going to be the ECB Bank Lending Survey and the ZEW Economic Survey on Tuesday, the monthly Australian jobs data on Thursday and the global flash PMIs on Friday. The US is going to be a little bit thin for data this week, and most of the focus will be on Joe Biden's inauguration, and even more so, I think, on how Donald Trump and his supporters handle his exit on Wednesday. In the meantime, let's go and have a look at the charts and see what they suggest, beginning with the FX majors. And I'll start by looking at the US dollar index. The US dollar became quite oversold heading into the end of the year following the Democrat victory and the increased spending plans promised by Joe Biden. And in the longer term, I do think further downside may lie ahead. In the short term, though, we've seen quite a decent recovery in the dollar in the last couple of weeks, helped in part by short covering of the net short position, to a large degree on the back of the rise in US bond yields, which, as you can see, have seen the US 10-year yield rise back above 1%, having been down around 0.5% in August. So we'll go and look at the dollar index and then head into the currencies. So here we have a daily dollar index chart, and as you can see, we bottomed out at around 89.30 here. And we have seen quite a recovery back up to current levels, finishing close to the high on at the end of the week last week. Now, as you can see, these US yields, we've got the 10-year trading back above 1%, although it did come off a little bit on Friday, and the 30-year is also heading higher. I'm just going to have a quick look at those charts in a second, but in the meantime, the daily dollar index chart do suggest that the dollar's possibly got further near-term strength ahead of it. We probably need to take out this high here, that being at sort of just above 90 or around 91, and then we've got this trend resistance coming in here, which is around 91.45 or so, 91.50. So that's going to be resistance, but I do think we're possibly going to head that way. We've got this low down, this low here as well to 91.70. If we break above that trend line, we've got resistance there. So it's probably going to be a slow start to the week. I don't expect an awful lot really until Wednesday, particularly with the US being out on holiday on Monday. But as I say, the dailies do look quite supportive. If we go further out, the weeklies aren't showing us a great deal, possibly a basing formation, but without much momentum really. We are recovering off the lows. The monthlies, though, if I go further out still, they're still pointing quite sharply lower, the indicators. And I think at some stage in the next sort of 3 months or so, we are going to see the dollar possibly go a little bit higher, but then resume its longer. This is, as I say, a monthly chart. Resume this longer term downtrend. While we're here, I'll just have a quick look at this 10-year bond yield chart, and as you can see, it does look as though yields can still head higher. This is a monthly chart. We've taken out some important FIBO resistance. And it does look as though yields can head higher. The high on this month here was basically 1.25, and then we've got sort of 1.45% up there. Now, whether that comes into play down the track or not, I'm not sure, but I do think that's going to be dollar supportive in the near term. If we come back nearer home, the dailies are not telling us an awful lot, possibly topping out for the time being, but we did get up to sort of 1.2% last week, and I do think if we can take that out, then we can head higher, which should see some near-term strength in the dollar, supported by higher interest rates. So with all that being said, we'll now go and have a look at the currencies, starting with the euro. Okay, so here we have a daily chart of the euro, and having topped out at around 123.5 early in January, we've really slid slowly lower, and it does look to me that the indicators are pointing further south. So I think we can come down and test this level down around here. This being sort of 119.5, 119.30, 40 level, which where the FIBO level coincides with the rising uptrend. The ECB are not going to want any further euro strength. I think they might be fighting a losing battle later in the year, but for the meantime, I suspect we can go back down towards 120, 119.5. And if we were to break that, then we see further weakness still, but that's some way off at this stage. On the top side, if we come back to the 4-hour charts, we're going to have resistance around these levels here, so this 120, 150 early in the week. But once again, the indicators are pointing lower, so it would seem to me that this level here is going to 120 or 60 or so, where the FIBO and this low here comes in. That's going to provide some support, but on a break of that sort of 120.65, then I think we can probably move down to this sort of 119.80, 120 area, and it would not surprise me to see it down there. Having said that, I'd be looking to probably buy it down around there for another bounce off this support level for a move back towards 121. And a lot's going to depend on how things turn out at Biden's inauguration. Hopefully it'll go off peacefully, but there could be some volatility around that. In the meantime, though, I expect mild dollar strength and possibly fairly range-bound conditions. Moving forward to dollar yen, really I put dollar yen in the too hard basket. It does look as though it's forming a wedge, which we could see an upside breakout, further dollar strength. This is a daily chart. The indicators are pointing mildly higher, although the RSIs and the stochastics are mixed, but the MACDs look vaguely positive. I think there are far better things to trade than dollar yen. If US yields do head higher, though, the dollar will move up, and will look to test this level where the 100-day moving average is. That's around 104.70, and on the downside, this 103.5 level is going to provide the initial support, and below there, I guess we can head back to sort of 102.5. But everything with dollar yen is a bit slow moving at the moment, and there are better things to look at. Moving forward to cable, and that's been pretty interesting, really. Cable has got significant resistance up here and met it once again over the last couple of weeks. And if the indicators are fairly neutral, really, so I'm not really got much of an opinion. If we do break above this level, so 137, then I think we can go higher. But a lot depends on Brexit headlines, I guess, and how the trade deal develops over a period of time. But in the meantime, I think we're probably fairly range bound. But and the 4-hour charts do suggest we've got a bit of a double top, and so that's going to be quite significant. This 137 area, and at the meantime, the 4-hour charts do look a bit heavy, and so it wouldn't really surprise me to see a retest of sort of 135. And possibly lower down around here, this sort of 134.80, and potentially even back down here below 134, where I'd be looking to buy it again. But in the meantime, I'd probably rather be looking to sell rallies in cable, stop loss above 137. But I'm really looking for a move down towards this support, buy it there, and then for the next leg to the top side. Moving forward to the Aussie, which has been pretty strong. We've had a decent uptrend, but I do think we've possibly found a bit of a top at around 78 cents here, and it wouldn't surprise me as with dollar strength elsewhere, and we had a bit of a risk-off scenario on Friday. It wouldn't surprise me to come back down towards this sort of 76.5 area, and possibly a little bit lower in the next couple of days. I don't think we're going to do an awful lot, but it does seem to me that there might be a little bit of downside. The dailies are not showing us an awful lot at this point of time, possibly drifting a little bit lower, and the weeklies are possibly getting a little bit toppish as well. In the longer term, though, I kind of think the Aussie can probably do okay as long as the stock markets remain firm, and a break of 78 would allow a move towards sort of 80 cents. But for the time being, I don't think I'll be really looking for too much above there. As far as the coming week's concerned, I think I'd probably look to be a seller on any strength above here, probably with a stop loss around above sort of 78.50. And on the downside, I think we're probably heading back towards 76.5, possibly 76, but I'd be looking to buy it down there as well. So trade the range without too much bias one way or the other. The same kind of applies to the Kiwi. We'll just go and have a look at that quickly. That also looks a little bit heavy to me starting the week, sitting here at 71.30. It really would not surprise me to see a move back down to sort of 70.80 and possibly even down to this area here, sort of 70, where is that, sort of 70.10, but that's not going to happen today. It could be a possibility later in the week, I guess. The 4-hour indicator is beginning to point lower, and the dailies look a little bit heavy as well. The weeklies, if I blow them up, as with the Aussie, looking a little bit toppish. So I'll trade the range. I don't think we're going above this high here, sort of 73, the figure 73.10 where it got to last week. But equally, I think you'd be looking to buy it down around 70 cents if and when it gets there. So that's enough on the currencies for the time being. Go and have a look at the stock markets now. Okay, here we have a 4-hour chart of the Standard & Poor's index, the S+P 500. Now, I've been relatively bullish on the stock markets, but I think coming into the new week, we may see further downside. The 4-hour charts do look a little bit heavy. The dailies are fairly neutral, so any downside might be fairly limited. But the weeklies also look a little bit toppish to me, and we've got some bearish divergence here. So I'm a little bit cautious. I mean, we're sitting near all-time highs, so I don't think we should be getting overly bearish. I mean, we're only what, 60, 70 points off the all-time high, and if we do come down, then I think that sort of 36.70 level back into this sort of messy consolidation area, that's going to provide some support. But on the top side, if we can make a move above this 38.20 odd area, then I guess we can head towards 3900. I don't see that being the case in the next week or 2 weeks or so. And I think, if anything, I'd rather be a little bit short than long, but equally looking to buy dips down around, well, between, I guess, sort of 36.70 and where's this 35.80. So that this 100-point area, I'd be looking to buy dips on the S&P. As far as the Aussie stock market goes, that's been very messy, really, and trading sideways for the best end, well, really since early November, I suppose. We've had this choppy sideways trade. It does look as though we might be forming a bit of a triangle, but the indicators, or for Monday anyway, they're pretty flat. I don't think we're going to do an awful lot on Monday. The dailies equally are not doing a great deal, and the weeklies might be becoming a little bit overbought, but they're not showing any signs of downturn yet. So I think possibly further sideways consolidation, possibly with a bit of downside attached to it. So I think I'd probably rather be short than long, and this is the SPY, so I'd be looking to sell that around sort of 66.50 on Monday. I'm probably looking to take it back somewhere below 6600, but I'm not looking for a great deal given that the US markets are closed. And now we move forward to the commodities, and here we have a 4-hour chart of gold, and that's been pretty volatile, really. Gold has traded a range of what, 1760 to 1960, that's a $200 rally. So and the market got fairly bulled up there, I think, and got caught long, which is why we saw this sharp sell-off. And the 4-hour indicators are suggesting it could remain fairly heavy on Monday. The dailies also look a little bit heavy. Now we've actually closed. We've got support here. We've got the 200-day moving average and this rising trend support here. But if we do break through that sort of below the sort of 1920, 1925 level, then I think we can. Sorry, 1820, 1825. Then we can head back to these 1760 lows. The weeklies are not helping either. The weeklies are pointing lower. They do look heavy. At some stage, I think we're going to be finding a decent buy area for gold, because I do think as the US dollar weakens over the course of the year, which I suspect it's going to, gold will reprice itself higher. But right now is not the time to be buying it. Having said that, if we were to see it down at anywhere, well, this 1760 is going to be a good support. If we saw it down around this 1680 level at any stage, then I think I'll be looking to pick up some gold. And the same applies with silver. I think that's going to remain choppy, but basically heavy for now. But I'll be looking to buy it down here. If we saw it around 23, possibly even down around this sort of 22 level, I'd be looking to buy it for the longer term, because I think silver can reprice itself higher. If we have a look at the weeklies, they do remain heavy still, so I wouldn't be in any hurry to get long anytime soon. As far as the oil chart goes, well, we were calling for oil way back when, before ahead of this resistance. We were calling it to $55 a barrel, and basically it's more or less been there now. So we're in this channel, as you can see. I think at 55 I'd now be a seller of oil. Not looking for a huge fall back down here, but back towards sort of $50 a barrel. This red line, or red area of what was resistance, now turned support. That should hold it. That's sort of $48 a barrel. So I'd be a seller at 55. Oh yeah, 55, 57, and I'd have a stop loss, I think, above. My stop loss actually would be above this level here. Or basically selling at 55 with a tight stop above there, I guess, is what I'm looking at. But looking to buy it back down on a dip down to around this level here, which is at sort of 49. So trade that range, 50, 55, I guess, for the time being. The daily indicators do look as though they might be running out a little bit of steam, and we have got a bit of bearish divergence. Nothing major, but obviously a lot depends on what OPEC come up with at their next meeting, but I think in the meantime just trade that range. One other thing before we wind up, I'll just have a look at a couple of the FX crosses. Okay, here we have a daily chart of euro sterling, and it's sitting on fairly major support here, as you can see. If euro sterling was to head below this support, which currently sits, well, right around here, so 88.5, then there's minor support, so 88.10 or so. But then there's not an awful lot to 87.5, and I think we could well be going there. The dailies are beginning to point a little bit lower. The weeklies are fairly flat, and we are actually coming into some support here. So and that looks to be at around that 88.20 level. So maybe some caution is required. But if we can get through there, then I do think we can head back down here, and eventually these lows here could come into play. So 86 3/4. As far as the other crosses go, they're all a little bit messy. Sterling Aussie is quite interesting. That also looks heavy, but I can't get all that enthused about a much stronger Aussie. So while we're calling for a stronger sterling or a weaker euro and euro sterling, I don't think we're going to see that much. Although the charts do look a little bit heavy, I don't think we're going to see much sterling weakness. But it does look a little bit heavy in the short term. So it might be a reasonable play. Looking for sort of 175, 174, something like that. But I don't think I'll be looking for too much. But I would certainly be a seller on a rally towards 177, 178 for the time being. Elsewhere, the crosses are all a little bit messy, so I'll probably leave them alone. Euro Aussie actually looks interesting. It is trending low. This is a daily chart, but without huge momentum, and the stochastics are becoming quite oversold. So, but the trend is lower. The other one I like is Aussie Kiwi, if I have a quick look at that. So here we have a 4-hour chart of Aussie Kiwi, and since basing out down around here, it's a 104, we've seen a steady trend higher. Now we are sitting up against some decent FIBO resistance here on the 4-hour chart, 108, but if we can break above that, then I think we could head sort of 109 and possibly higher in time. The 4-hour indicators aren't showing us a great deal, so maybe we have a quiet session. The dailies do point higher though, and I think if we can take out this 108, as I say, 109, 109.30, and then back above here to sort of 110, that's some way off at this stage. But I do, the daily charts are looking a bit positive. The weeklies though, fairly neutral, so maybe I'm getting a bit ahead of myself, but I would rather be a buyer on dips, I think, than trading it from the short side. So that's about that. So that's about it for this week. As I say, if you like the videos, please give us a thumbs up and subscribe, and we'll be back with another video this time next week. Cheers.